After this big crash we saw in January, February, and beginning of March, many of you asked me how my portfolio is doing and which stocks I've been focusing on during this few months. Hello everyone, welcome back to the channel. Today I want to talk about my top 10 performers in my portfolio at this moment and which stocks I've been buying so far. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. And I will be comparing these 10 stocks with my 10 top performers back in December, which is when I did this video last. But first, let's see how the market have been doing, because we have been seeing some movements lately, and we can see that certainly the S&P 500 is up 8.32% since March 14th, but it is still down 5.76% year to date. Same with the Dow Jones, is down 5.13%, and the Nasdaq is down 10.36%. But we can see that all of them have been recovering since March 14. As remember that the Fed meeting that we had was in March 15, and in my opinion this is what has been happening with the stock market and why it has been recovering, because there was so much uncertainty since January, everyone waiting for this Fed meeting on March 15, as we didn't know what they were going to say, what if they were going to change anything or not. That created a lot of uncertainty in the market, and obviously the market does not like uncertainty, and obviously also with the Ukraine and Russia war and all that. But now that the Fed talked on March 15 and Jerome Powell said that they are not expecting a recession, that they are going to increase interest rates just like they plan to, and that inflation will most likely start decreasing in the second half of this year, the uncertainty kind of decreased in the market and it has been recovering since then. As we can see, for example, the S&P 500 is up 8.32% since then, but it is still down year to date, so it is something to take into consideration. But now, let's start with the portfolio. On December, these were my top 10 stocks or performers in my portfolio, starting with Microsoft, Amazon, Lyft, Apple, Facebook, MasterCard, Visa, Disney, Square, and Lemonade. And here you can see the return that I had at the moment. The only one that I was losing money with was Lemonade, but the first 9 where I was making money or up in my position, even though Square was just up 3.37%, even after I was up about 70%, as we know that the stock got really overvalued. But let's start with the portfolio right now. The first stock that is the highest at the moment, or the best performer at the moment, is Microsoft as well, with a return of 118.75%, which we can see that it decreased a lot, as it was 143% in December. But I have to say that I have not added to this position for so long, mainly because of this, because I believe that it's a little bit high at the moment and I would like to wait for it. If it goes down a little bit, not a little more, if not, then I'm fine with it. It only represents 2.43% of my portfolio. It's not a big position. Obviously, I regret not adding more when I started this position, but still I believe it is a good company to hold in long term. Plus they have a little dividend. Now the next company is Amazon. It's still up 87.64%, not 99.89% like in December, but it still represents 26.94% of my portfolio. And I had to say that I have been adding to this position because remember that this stock dropped to about $2,600, and then it has been recovering, plus they announced the split. So after that, the stock went over $3,000 and I didn't add more, but I added to this position back in January and in February as well, as I was taking advantage of those prices. Now, the next stock is Lyft. Lyft is up 38.80%, even though I was up at one moment about 80 to almost 100% in this position. It's up 38% and it was up 58% in December, meaning that the stock has dropped a lot, and it represents 4.29% of my portfolio. I have not added more to this position since 2020, as I started investing in it before the pandemic. I added a lot during the pandemic as the stock crashed, and now I have just been holding, but I have not been adding to this position. Now the next stock is Apple, my favorite company. As you guys know that I use almost all of their products, as you can see here, and I like what they do, so it represents 13.94% of my portfolio. I'm up 36.82% at the moment. At that moment on December, it was up 40.31%, so it it went down a little bit, but not as much. And I have not been adding since 2021 because, in my opinion, it is expensive at this moment. And in December, it was already expensive. I think it was at 160 something. So I was not adding at those prices, and not right now at $171 per share. But I have to say that, as you can see, I have a high conviction in this company and this stock, as it represents 13.94% of my portfolio. The next stock is Visa stock. Visa is currently up 27.06%, but we can see that in December it was up 27.34%. So it did not drop that much. So this is the kind of companies that you want to take down, to take notes of, as it worked to kind of balance my portfolio during this crash. All of the stocks, or most of my stocks, dropped a lot during January and February, and we can see that Visa did not drop that much. Obviously, it has recovered since March 14th as well, but still, it is not a big drop in comparison to the others that I just mentioned, and that is a company to have in mind. It only represents 2.87% of my portfolio, and I added actually during the drop, but not as much, and still, I believe it is a good company in the long term. I believe it has potential, and I have been tracking it for so long, but I don't have a big position in it yet. I have to say that I have an emotional feeling with this stock because it was my very first stock that I ever bought at $119 per share back in 2017. So obviously it is kind of different for me, but I like the company right now as well. It's not just the stock. The next stock, or Visa competition, MasterCard. MasterCard is up 26.50%, and it represents 5.54% of my portfolio. As you can see, that it is a little bit bigger than Visa, but we can see that in December it was up 31.83%. It represents a little bit more because in 2021 it dropped more than Visa, so I added more to my position. But I like both companies. Both companies have potential. Both companies are in the nice industry, and an industry that has potential long term. So I believe that I will continue holding these positions long term, as I don't see nothing wrong with these companies, even though many believe that I should have sold Visa and MasterCard a long time ago. But I believe that in the long term they will continue being there. They will continue making money, we will continue using credit cards, and they will continue benefiting from it. Now it represents 5.54% of my portfolio, but the next stock is Disney. One of my favorite stocks at this moment. Disney is up only 0.44%, and we can see that in December it was up 11.14%. As we know that the stock has been dropping a lot since their Q3 report, and even more during this crash. Now I see potential in this company in the long term, and even more now that they have been opening their parks, their hotels, their cruises, and more. And this company gives me exposure to those kinds of industry. It gives me exposure to cruise line industries. It gives me exposure to hotels. It gave me exposure to theme parks. As you guys know, that I was analyzing Six Flags, for example, in 2020, but I didn't invest in it. Disney gave me that kind of exposure, and now to streaming service as well, with Disney Plus, ESPN Plus, Hulu, and more. So I believe that it has potential long term, and I'm buying at these current prices. The next stock is Facebook, Meta Platforms. Meta Platforms is currently down 9.39% of our portfolio, and it represents 8.72%. I have been adding to this position, in my opinion, a lot, as it has been dropping a lot. I do have to say that I posted a video talking about this stock when they reported their Q4, and I said that this stock now comes with a new risk, in my opinion, which is the metaverse. They are changing or improving their company to go directly to the metaverse and focus only on the metaverse, even though they will continue with their current business. But now that they are more involved in the metaverse, it brings a little bit more risk, as we don't really know what is going to happen with the metaverse in the long term. But if we really see the metaverse happening as we believe it will, Facebook will be doing well, in my opinion. I added to this position January 24th, February 3rd, February 16th, February 23rd, and March 4th. So in my opinion, I'm holding this stock in the long term. You can see that in December, it was up 38.94%, and now it's down 9.13%. So the stock has dropped a lot in the past months. The next stock is Square. Square is currently down 10.61%, or well, Block. But in December, it was only up 3.37%. So the stock was already dropping. As we know, that the stock got to $280 per share. It got really overvalued, in my opinion. And now it has been dropping. I have an average cost of $148, and it represents 4.72% of my portfolio. I have been adding as well to this position during this crash that we just had. I added on January 4th, January 5th, January 10th, January 18th, January 21, January 24th. I added a lot in January, and February 16th, February 23rd, and March 24th. So yesterday I added as the stock was down 3% when the market opened up at about 10:20 a.m. As we can see here, the stock dropped a little bit at the beginning of the day. So I took advantage of it and added to this position, but it represents 4.72% of my portfolio. Now, the last stock is one of the non-profitable high-risk stocks that I have in my portfolio, and this is Tattoo Chef. Tattoo Chef represents 3.22% of my portfolio, and I'm down 42% at this moment, as I have an average cost of 20.98. I have always said that about 20 or below, I like it, and now even more that it is at 12, but I've not been adding that much. I've been adding, but not that much as I've been adding during 2021 when it got to $15, to $18, to $17, and now that it's at 12, I just added a little bit this month, but not as much. We can see that Tattoo Chef was not in the list in December. It was Lemonade that was down 15.54%. So you can expect that all of the other stocks, non-profitable high-risk companies like Lemonade, like Shift, like the Teladoc, like Fubo, like Whoosh, and Tattoo Chef are below at this moment, and I'm losing over 40% of my position in it. I do have to say that if you make your own calculations, you can see that my top 10 stocks represent 73% of my portfolio. So without Tattoo Chef, it's about 70% of my portfolio. With this, I want to say that, in my opinion, I have created a nice portfolio, a diversified portfolio that helped me balance the losses with these non-profitable, high-risk, but high-potential stocks such as Teladoc, Tattoo Chef, Shift, Lemonade, Fubo TV, and more. As we can see that 70% of my portfolio is doing very nice. Obviously, some have dropped in comparison to December because of the crash, but they're still making me money, while these ones are losing money and have been losing money for almost a year now, as we know that this stock have been dropping throughout 2021. So what I did, or what I have made with my portfolio, is that this 70% of my portfolio are these high conviction stocks, which are Apple, Facebook, Amazon, Microsoft, Visa, MasterCard, Square, and all that. And even though some of them are down, like Facebook or Square, they are balancing my big losses with Fubo and all that. So my portfolio is not getting that affected. So, but still, obviously, I got affected. I don't like losing money. Obviously, I'm not saying that it's okay to lose money or be down in a position. No, I'm just taking advantage of it. Now that I showed you my top 10 performers, let me talk about the stock that I've been buying the most during this crash. During 2021, we saw all those high risk, high reward, and non-profitable, but with great potential companies dropping and crashing a lot during 2021 because of the uncertainty with interest rates, inflation, the Fed, and all that. And I have been adding during 2021. Even during 2020, I added a little bit to Teladoc, to Tattoo Chef, to Lemonade, but not as much as I did about 3 months ago. I have been adding mainly to these stocks that were really expensive during 2021, such as Square, Amazon, Apple, Facebook, even though Apple I have not added since November because the stock went up massively in November and have not come down even with the crash that we just had. But I have been adding to those positions mainly because they were really expensive during 2021 at the end of 2020. So I didn't add during those times, and I've been taking advantage of it during this times, increasing my positions on those kind of stocks. Obviously, I added as well a little bit to other positions, but mainly focusing on this one. Now, my focus can change in the short term, but I will continue holding these positions in the long term. I just sold one stock this year, which is Carnival, as I have been wanting to sell it for so long. You guys know that I used to invest in Royal Caribbean and Carnival. I sold Royal Caribbean in 2021 when it recovered a lot. I was up 50%, so I decided to sell, and now I just sold Carnival. I wanted to sell before, but we got the Delta variant, the Omicron variant, the crisis, inflation, war, and so more, that it was down big, so I decided to sell right now. Nothing wrong with the company, but I already have exposure in the industry with Disney, and I want to relocate that money on other stocks, which you guys know that I've been looking at Airbnb, at Adobe, or Intuit, so I might invest in any of those 3 stocks with this money that I just sold from Carnival, but obviously at a nice price. For example, Airbnb went up massively this past weeks. It's at $167 per share when it was at $131 per share before the Fed meeting, which is when I wanted to start a position, but I didn't, so I will continue to track it in the long term. Same with Adobe and Intuit, even though they are still down a little bit and they are getting to a nice price. So hope you enjoyed the video. Leave you here a nice video recommended by YouTube and here for you to subscribe. Thank you and see you next time.